All right, let's keep dissecting today's action because it is getting busy. The NASDAQ lower now by about 1.5%. Scott Bauer is joining us, CEO of Prosper Trading Academy. Scott, market rolled over pretty quick. Give me your thoughts.
You know, I talked to Ben this morning about that and just expected this entire week to be extremely volatile, honestly, based on all of the economic news and earnings coming out. Did I think we were going to see this kind of rollover today? Not really, but I think what we're seeing headline news, the acceleration of what we're seeing, unfortunately, with COVID cases in California, not just in Florida, is absolutely front and center. And people are starting to realize, you know what we've been seeing over the last few weeks and maybe the last month or so is going to hit the economy.
You know, this is pretty interesting, Scott, because the only thing I have is I look at this market today and the stuff that's actually hanging on is the stuff that needs the economy the most, we've been told. Industrials, banks, materials, even energy stocks are still in the green. It's all the stuff that would, I think, like the stay-at-home headlines, right? Why the heck is Zoom down 5.7%? Maybe this is just like a big rotation.
I don't know if it's as much a rotation as it is people actually getting spooked out right now and just taking profits off the table. So many, you know, these people have so much profit built up in so many of these stocks, a Zoom, a DocuSign, all these stay-at-home stocks. And I think they're finally starting to feel like, you know what, 100, 200%. All right, enough's enough. I got to take some out.
Yeah. Scott, I think this is a good point. Elaborate for me when you say just kind of the panic kind of fear selling, because I do see what you mean, right? The money is not really going into, I mean, the Russell 2000 is still down on the day. It's just the stuff that was up, you know, is hanging out somewhere in positive territory. It's not looking like the money's moving around too much, just getting yanked out of tech.
Right. I'm not looking at a rotation. And you know what? All you have to do is follow the VIX to see what today is really like, because even at the peak of the market today, when S&Ps were up 45 and Dow was up almost 500 points, the VIX was up considerably. And that really just kind of, you know, told the tale here, maybe of a move coming like what we're seeing this afternoon.
Yeah. All right. So right now we look at equities trying to hang on for the ride. I mean, at the end of the day, I mean, we'll see. We got 15 minutes left, but we did try to touch above our recovery highs from June 8th. Do you think that's still in store, or flopping right when it counts? Is that a bad sign?
No, I don't think it's a bad sign yet. Listen, I think the recovery is still intact, but you know what? Maybe people will start being a bit more cautious, and maybe, if anything, for the, you know, for the greater good. Let me put it that way. Maybe people will start to realize that the market does need to follow the trend of what is going on, and maybe, just maybe, people will start adhering to guidelines a little bit better. We can get through this.
Yeah, Scott. Right now, the dollar has come off the lows. Bonds too.
Yep.
Is there going to be a lasting safety in these areas, or if the going gets ugly again and we start to, you know, keep moving south on big banks, does that drag down everything else like it did in March? Because there was nowhere to really hide there for a couple of weeks.
No, there really wasn't. And even the dollar, which got down to what was at a low right around 95 in March, you know, as everything else was getting hit pretty hard. I do see the dollar leveling off very much here. Maybe there's a tick or two, you know, further to the downside we can get, but between the lows we saw last month and then the lows all the way back, like I said, in March at 95, we're getting to an area of major support there. So I would be really surprised to see the dollar fall off any further.
Yeah. What do you want to trade and how in this environment, Scott? The VIX really just refuses to stay under 30 for very long.
Right. No, and especially last week, I think we got down to 26 and a half. That is the 200-day moving average. So, you know, volatility is here to stay, but I think in any of the commodity space, Oliver, moving forward here, knowing that there is risk on at any time, or excuse me, risk off, even when the markets rally, I think you have to look at it something like gold. And I'm in a gold ETF, or GLD right now. I've had a long position on and I'm adding to it.
GLD, gold,
yes,
barely right now hanging on for the ride, Scott. It's up it's about flat on the session. Led stocks too with the move. Is that a risk or a risk-off play? I mean, where does it fit between stocks, treasuries, and the dollar?
On a day-to-day basis, nothing. But overall, we know there's going to be volatility, at least heading into the election, no doubt about it. We know that, unfortunately, the risks, especially the headline risks to COVID-19, are not going away. So what's going to happen here? I believe people are going to keep flocking into gold. Now, how does that dynamic work? Since I just said that I think the dollar is going to be flattening out here and not going down. Normally, we see a big divergence there. I think they can actually both rally together in a risk-off environment.
Yeah, okay. Scott, good combo running across the gamut here from asset classes. Mr. Bauer, always good stuff. CEO of Prosper Trading Academy. Thank you. When we come back, let's continue this look